In this video, we'll just quickly run through some of the features that this calculator can help you with. So in the default area, we have the fixed units model, and let's say you're trading in shares with going long, and you have a quantity of 1,000. In this calculation, basically you want to find out how much capital you need to go ahead with the transaction. And you want to trade with 1,000 shares, and the stock price is currently at $15. You want to get out at $12, and you want to make a profit at $19. Done. Calculate. Let's say you know your brokerage fee in this. Let's go back. Let's say your brokerage fee is $30 on both ends, on the buy and sell. Calculate. Now you can see how there's an additional break-even price provided there for you. So to break even, your entry was at $15. Your break-even price was at $15.06. So if you wanted to just make no money and you needed a break even, that's where you get out. Now let's reset this. Now let's go to the fixed dollar financial model. So in this one, we're trying to find out how many stocks you can buy from the amount of money you've actually prepared to invest. So again, let's stick with shares, going long. Near the stock price is at, say, $50, and the stop is at 45. Profit target of, let's say, 60, and your total capital is $50,000. Calculate. There you go. Number of stocks to buy. Quantity is 1,000. Going back. Let's go to fixed dollar risk. In this one, you tell the calculator how much money, how much of your capital you're prepared to lose. And it'll tell you how much capital you're prepared to, how much capital you should be putting in to fulfill the parameters of this equation. So let's say your risk is $2,000. So we calculate that. Based on a $2,000 risk, the calculator is telling you your position size should be at $20,000 if you are willing to or prepared to lose $2,000. This calculator actually uses your stop loss to calculate the total position size. If you want to find out the equation that I used for this, you can go to our website and browse to the fixed dollar risk stock calculator model information page. Going back, let's try out the next financial model, which is fixed percent risk. So this again is a slight variation to the previous calculation. In this one, you know how much capital you've got. Let's say it's at 100,000, but you only want to risk 2%. So let's put it in there. Calculate. So based on a 2% risk on your total capital of 100 grand, the calculator is telling you your position size should be $20,000. And this is again based on your stop loss. So if we go back and we change the stop loss to something closer to $50, let's say 48, and we'll see that now the position size has increased to $50,000. Then if we go back and go the opposite way and actually go, we want to stop at $30 and calculate that, it will be much lower. So now it's telling you the position size should only be at $5,000. When you play around with this calculator, you can see how the numbers change by viewing the previous calculations. Also note how the risk-reward ratio changes from 2 to 5 in our previous calculations to a half to 0.5. Going back, let's try the final financial model, which is the float percentage unit. Now let's stick with the total capital of the same amount. The float percentage units is the amount of capital you're prepared to risk at the worst case scenario. So let's try putting 5% in there as well. Again, calculate. That's the number you get. Alright, that's all we have for now, and I hope you try the other functions of this calculator, including adding in brokerage fees, like so. Say $60 there, $100 there, and calculate that. It will actually tell you your break-even price as well if you go ahead with that trade. Okay, thanks and good luck.